Good morning, this is Wayne Bilal with another Smart Profit Maximum Moment. Today we're going to talk about why you need to concentrate on cash profit. And I took my accounting classes and passed the CPA exam. The first I graduated with an accounting degree back in 1976 and passed the CPA exam in 1977. God, I'm old. Been doing this a long time. Anyways, while I was doing that, I learned the definition of business profit as promulgated by GAAP, Generally Accepted Accounting Principles. And what I didn't learn at the time is that trying to teach business owners to understand the GAAP principle of profit was really hurting their ability to grow a highly profitable business. The problem is with the basic accounting formula itself. Sales minus expenses equals profit. So what's wrong with that formula? Well, for a long time, I didn't think anything was wrong. And then I found a book that I highly recommend to pretty much everybody that I use, everybody I coach. Profit First by Mike Michalowicz, Michalowizz. Anyways, he's a serial entrepreneur and has made quite a few mistakes, written quite a few books, made a lot of money. All right. One of the things he says is that the problem with the accounting formula, sales minus expenses equals profit, is that it concentrates on the wrong thing. As humans, we normally concentrate on the first item on any list. As business owners, we concentrate on increasing sales at all costs. Then we pay all our expenses. Finally, what's left over is profit. Most business owners wait for the CPA to tell them what the GAAP profits were after they perform their magic and generate a financial statement. Second, it doesn't force us to look at every sale and expense with an eye towards profits. Is this a sale with a high profit margin after all costs? Is this a sale that leads to profits in the future? Or is this just one of a kind sale that just increases related costs? Does every dollar of expense lead to increased profits? How important is that? Well, I worked with a client that was losing money. We sat down, did this kind of exercise, plus some stuff that I helped him with as far as calculating what his salary cap should be. Every business has a salary cap. We'll talk about that at another time. We calculated that, and basically what we were able to do is in less than a year, his 150,000 plus loss became 150,000 plus income, profit. Okay, now what's really interesting about that was there literally was almost no increase in sales. For over $4 million company, the sales were increased by like $14,000, which is a statistical error almost, all right? So all the increase came about by understanding what you keep is more important than the sales, all right? The third problem with the GAAP formula is that the human nature is to spend. The more we increase sales, the more cash we bring in, the more cash we bring in, the more money we have to spend. The more money we have to spend, the more money we actually do spend. All right, we justify all this increased spending as necessary to grow our business sales. We are only concentrating on growing the top line of sales rather than the last item of profits. Finally, the accounting formula puts profits last and makes getting to that final number so complicated that the vast majority of business owners just pretend they understand it. What is last on the list is almost always ignored, okay? Human behaviorists call it the primacy effect. The accounting formula puts sales first, so we concentrate on sales. It puts profits last, so we barely even think about it. What is your company profits? As accountants, we calculate GAAP profits based on a ton of estimates. When I was teaching accounting, somewhere halfway through the course, or at least by the end of principles even, one of my students would go, I always thought accounting was exact. It really has a ton of estimates. And these include what is the value of your inventory, what is the collectability of your receivables, when should a sale be recorded, when should a payable be recorded, how do we handle customer prepayments, how and when do we record profits on large long-term construction projects, how long and what method do we use to write off equipment. Many decisions go into a CPA's calculation of your bottom line. In truth, the GAAP formula is really just an estimate of your profits for a specific period of time. Way too complicated for us to run your business. Listen to this and underline it. Your definition of business profit has to be much more simplistic. Simply put, how much did I increase cash over the prior year? That's it. Cash is all that counts. It's great when you have it. It sucks when you don't. The only thing you should be focusing on is cash profits. So, a couple things I would do. One, make sure that you pick up Profit First by Mikulich, I don't know how to pronounce his name, I apologize if he ever watches this, to discover a simple system any business can implement to growing a business concentrating just on your cash balance. Trust me, that's a book worth getting. I wish I'd found it 20 years ago. All right, it's helped change my business, and I've used it with multiple business owners it's really changed the way they operate. And then pay attention. I'm coming out with a book and a course, and one of the main areas is going to be talking, and it's the 90-day profit reset. One of the sections is going to be on finding the cash hiding in your business, all right? And we're going to talk about how to work this. Hey, until next time, remember, cash profits is all that matters, and let's make this our most profitable year ever. Thank you very much.